Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York. It is Wednesday, July 20th, 2016, and this is the daily report for gold and silver. We have some strong downside pressure in the precious metals markets as we witness yet another risk-on day with equities moving to new record highs, gold under pressure, silver under even more pressure. 13.15 current print in gold, putting it off about $17 on the day. That is basis the August contract. It's traded to a low of 13.12 and a high of 13.38. So as you can see, we are only about $3 off the low on the day. Net change off about 1.3%. But silver has really gotten hammered hard, off almost 3% on the day, 2.6, 2.7. As you can see, we're still looking at an active market. As we look at COMEX, $19.33. The low, $19.34, which is the low on the day. High on the day, $19.98. So traders, on today's daily report, I do want to put these most recent price declines into perspective, of course, on a technical basis, because that's what I understand best. And the fact remains, this correction that we are currently in is one that A, we expected, B, that we've plotted, and C, and most importantly, are still attempting to determine at what point we will see support come into the market. Now, it certainly wasn't a 38% retracement level, which would have been 1330. We have clearly broken through that. And as you know, over the last couple of days, it seemed as though it was plausible that we might in fact find some support at that area, because the lows that we were getting over those last couple of days came in just below it, but the closes of the market came in right around it. Now, this is 1330 right in here. We can see that the market has been actively trading through that price point and closed above it the other day, just at it the day before that, and slightly below that, of course, the day before that. This is Wednesday, Tuesday, this is Monday, this, of course, is Friday's trading activity. The fact of the matter is, I had a little ray of hope as we had a very, very moderate, actually very small up day yesterday, but we had no technical confirmation that any kind of support or conclusion to the correction was in play or in place. That, of course, is highlighted today as we had a dramatic decline in market prices, taking it well below that point. And so, as you know, there were two real key areas that I've been looking at. 1330, that was the first area. That's clearly been taken out. And so the next real level is the 61% retracement. That comes in at about 1300, 1301 on this chart, and that's right here. The interesting thing about that is if we carry that across, you'll see that that matches up with this high that came in end of April. It also matches not with the high, but with the close of the market back in June. So we have significant recent historical data in which this has been an area of key resistance. Of course, we broke well above that. You can see that right here. On one dynamic day, took it above that, never really looked back until making these new highs at around 1371. Now, there is also a minor level, and that is a 50% retracement. It's minor in that it's not a fib number. It's actually stock traders that put in the 50% retracement because they noticed many times as equities moved up and would correct the correction percentage, very many times came out to 50%. So 50%, that comes in at 1315. As I said, it's a minor level. We're trading just above it at 1319. But traders, I do believe at this point that there is a pretty decent probability that this market could, in fact, continue its decline and then find support. If not, at 1350, and we've traded below it but closed above it. Once again, we would need concrete evidence that that was the case, and as of this point, we have none. But if it goes through this minor level, the next major level, and I believe an ultimate level of support, because it's 61%, if we're still in a bullish rally mode, and a bullish rally mode from the beginning of this year at 1050, it really needs to hold the 61% retracement. It could go to 78, but traders, that's highly unlikely under the scenario that we're still in a bull run, and I am still taking that particular vantage point or viewpoint, I should say. Let's take a look at silver, though. So, traders, if you recall from yesterday's show, we took a look at silver. We took a look at this particular weekly chart. In fact, I believe I actually drew in this candle to be a long red candle. Now, it's a weekly candle, so at that point, we were simply looking at market activity, of course, Monday and then yesterday, Tuesday. But we talked about the fact that what we were seeing was really the beginning of a three-river evening star. Today's sell-off of about 54 cents, it's still actively trading as we look at spot, off 2.76%, has certainly filled this pattern out. And at this point, I am looking for this market to track lower. Where, in fact, will it track? As I said yesterday, there's a couple of key areas. You can see this bottom right in here, and this lines up to this top right here, which also lines up to a retracement level right here. That retracement, of course, is a long retracement from 25 down to about 14. When we do that, we get different levels. This, of course, being a 61% retracement here. That's the most logical place to look for. So that's about $18.50 or approximately 80 cents from where we are now. If that doesn't hold, our next real level is about $18 per ounce in silver. We've had a dynamic climb up, almost parabolic. I wouldn't be surprised if we see a pretty brutal sell down to lower pricing. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.